Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Kospi in South Korea too is trading with losses of well over 1% now.
Bank Nifty broke the previous low, which it did not do last Friday, but yesterday it did. 24,600 is on the Nifty, 24,620 or so.
I think on IT sector, the AI is going to be a structural hit.
I believe there is enough opportunity in the market for us to grow.
The cuts are not as deep as we saw yesterday, so it's a 37-point cut that we're looking at the Nifty.
ऑपरेशन महादेव जो कल एक हुआ है, इसकी जानकारी देना चाहता हूं.
That index is doing well, 0.5% higher. We have the small cap index as well, which is 0.5% higher.
Okay, well, finally, there is a bit of a bounce, and let's hope that we get a positive daily close as well. In the morning, we were saying that most short-term indicators are looking oversold, but not sure that whether this is going to be the day when those work. Well, for now, it's working. It's a 100-point move, 24,800 plus. And we need evidence by close that this is here to stay. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Surabhi, Rima here in the studios with me, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. And the numbers help, right? Like Asian Paints is a steady showing, not too bad. Stock is up more than 1%. L&T is higher ahead of the numbers. And then the global construct today. Europe continues to be firmly in the green for the second day in a row.
Just a relief to see one green day at least, and hopefully a green close. And like you're saying, let me add Amber to the list as well. No disappointment, decent growth, stocks up 4-5%. So, yeah, I mean, a green afternoon after a long time. It feels good.
No, it feels good. And, we basically now look at what the market needs to do to sort of, get out from under this downdrift that we've been seeing. We'll just need the market to basically cross above 25,000. 25,999 is the number. What is that? You have to do it in steps. So the last wave of decline which happened was from the high of the 24th of July to the 29th of July. The high was 25,246. The low was 24,598. The 61.8% retracement is 24,999. 25,000 rounded. And that is the first stop. Of course, the first stop is a positive, decent, solid, positive close. And then, for us to be able to say that maybe, it wants to do better things and maybe it's changing direction of travel, 25,000 is that sort of broad level that one will have to wait for the market to cross. Nigel.
Well, that's right. Guys, the good point is after a while, we have seen a bit of a short covering bounce that's played out. And earlier this morning, we had mentioned 2 points, right? One is the FIs are net short with 1.6 lakh contracts on the short side. And you had the PCR that had already come to the oversold levels of around 0.63 approximately. And today, just to add on to the list, you've had some good positive triggers. Results, Asian Paints, Amber, you had Hind Rectifier from the broader markets as well. That's locked upper circuit, 20% move on that name. That's already seen a big run. So after a while, we have a day when we're looking at positive earnings reactions. And the street likes that. So 140 points up. I'll tell you what, if just for today's trading session, we can get past the 24,850 odd level, we could easily see another 50 to 100 points on the upside on the Nifty itself, because there was aggressive writing suggesting that the 24,850 level will not get stumped out. So we'll have to keep an eye out on that mark. And the good news on the Nifty Bank is that, in fact, you have it holding now above the 50 DMA, gradually making its move closer to around the 20 DMA. Well, guys, let's run our viewers through what we have lined up on the show.
Absolutely. And there's lots of action coming up, lots of those stocks and earnings on our radar today. So let's tell you what the next 50-odd minutes are going to look like. We'll, of course, turn the spotlight on Asian Paints to begin with. The company's just reported numbers, and the stock has managed to recover from intraday lows, looking good. That volume growth number at 3.9% is quite strong, so we'll get you more in just a bit. Paradeep Phosphates has been the earnings star from the mid-cap universe today. We'll find out what is working for this fertilizer maker in the first quarter. We'll put the spotlight on their outlook ahead for the rest of the year. Moving on, we've got Morgan Stanley delivering a double upgrade for Tata Chemicals, and that's inspired a lot of confidence in this stock right from the morning, still up about 7%. We'll tell you more about the MS view and why they're so confident on Tata Chemicals coming up in just a bit. And again, Happiest Minds, again some green. Finally, good news coming in from a lot of these mid-caps, right? Happiest Minds reported numbers and the quarter's looking good. And Rima will tell us more about what are the other internals that the market is taking heart from. So all of that coming up. And then, of course, let's not forget, we have more nifty majors lined up ahead in terms of today's numbers. So action from L&T and NTPC expected post-market hours. We'll get you the expectations as we go along.
So how should you position yourself in the last hour of trade? Mitesh Thakkar is now joining in with a few closing strategies. Mitesh, did you go long? We've seen a pretty good intraday recovery, now up 150 points in the Nifty. What's your strategy been? And do you expect more strength in the market?
Yeah. So I think, I kind of talked about in the morning that this decline could get arrested around 24,500, 550 zones. We got a low of 598. But the idea is that with the PCL oversold and the weekly supports coming closer, we might not get, immediate declines. So, and the signs of an upward reversal are still missing. So therefore, I think on the upside, as long as we don't get past 24,950 zones, I would not turn positive. And even if you do that, then 24,250 is the next set of target which I'm looking at. So it's a market which will stop falling. That's the positive. But I'm not looking at a big reversal or a strong advance on the upside.
Mitesh, on the contrary, would you short this bounce? Or no, it's looking more durable to you?
No, not yet. As I said, I think with the PCR, I think Nigel also highlighted that. I also spoke about it in the morning. With the PCR reading in such an oversold levels, you might not actually be benefiting too much out of shorting the market as well. So I think this is a market you would want to, watch, see if you can get a directional bias, still then trade with stock-specific bias. The short side trade is nearly coming to an end, so therefore not much is happening over there.
Okay, so let's talk stocks then for the last hour.
Yeah. I have a buy on Syngene, and Tata Chemicals I think is also flat. So Syngene is a buy for me with a stop below 698 for a target of around 735 and strong, breakout taking place in Tata Chemicals. So maybe you would want to buy it in tranches, but try to buy it now. If you get a 10-15 point decline, buy more. Keep a stop below 972 and look for a target of 1040.
Got that. Thank you very much for that. Let's put the spotlight on Asian Paints, the stock which is shining in the last hour or so post the numbers. It's been feeling the heat from competition for the last 5 or 6 quarters, but this time it's turned in a steady quarter. Manglam joins in with the numbers.
Well, if you look at the Asian Paints numbers and the stock price move, it tells you that maybe the worst is behind. Why do I say that? Because, decorative volume growth on a base of 7% has come in closer to 4%, and the street was working with a number of just around 2 to 3%. Yes, if you look at the numbers year on year, there has been a mild decline in the revenue, but the street was fearing a bigger decline. So the revenues of the company have come in at around 8,939 crores. The street was working with a number of 8,835 crores. And for the revenue decline, it hasn't actually seen a bigger EBITDA decline. In fact, the EBITDA has come in at 1,625 crores. The street was working with a number of 1,600 crores. So that's telling you that the margins have maintained as well, 18.2% versus a poll of 18.1%. On the back of that, the net profit has been absolutely in line with expectations, a little over 1,100 crores. The domestic decorative volumes at 4% or nearly 4% is the key highlight of the numbers. And to add further color to the numbers, the management commentary, they've said that the industry has experienced a slight uptick in this quarter, marginally improved demand from urban centers despite monsoon slowing down momentum in June has meant that overall performance for the company has been good. And we have other verticals as well. Industrial coatings did well because of auto and protective coating businesses growing well. So that grew in near double digits. And we had operating margins which were marginally lower on account of higher sales and marketing investments. So there is no fresh negative that has emerged from Asian Paints numbers. And remember, the stock has already seen a correction of almost 30% from the highs despite the rally that we've seen from the lows. So maybe the worst seems behind for Asian Paints. And not just the Asian Paints stock, but also the entire paint sector. So if you look at the intraday chart of Berger, post Asian Paints numbers as well, the street believes that Berger will go ahead and do one step better. Berger also has moved to the high point of trade. I think we have Prakash Diwan with us. Prakash, on the face of it, these numbers are soft. But given the context and the commentary, it appears that perhaps the worst is behind. Would you agree?
Oh, absolutely. I think I wouldn't really read too much into the numbers because, you would need to see whether these numbers hold and set the base for the next quarter to be slightly better. But the commentary is not at all defensive. What you would expect a company to come up with, given how market share is shifting, competitive intensity is increasing, they would have tried explaining why they've not outgrown and all of that. But that doesn't seem to be the case. In fact, they seem quite positive, and the tone that is set is very clearly indicative of the fact that the current quarter ending September could probably be even better. Remember, early monsoon should have impacted volume growth, but this close to 4% is certainly a beat. So, and post this, things could only get better as festive season starts kicking in. So, all in all, looks like, a lot of the bad news is probably past us, and the market has reached some sort of an equilibrium in terms of market share as well.
Thank you, Prakash, for joining in. Hemang Jani is also joining in into the discussion. Hemang, first a quick word on Asian Paints. Now, between a Berger, Indigo Paints, Shalimar or Asian Paints, which one would you bet on?
Rima, I think the entire industry is going through a challenging environment. And while, people can say that Asian Paints number were good and, the stock also has corrected, we have to realistically see what kind of growth some of these paint companies can deliver in the current, environment. And also, I think the valuations of most of the paint companies is no way attractive. So there has been a de-rating which is going on. You might see a bit of pullback because of the numbers being slightly better. It might go up a bit here and there. But I would certainly avoid this sector given the headwinds in terms of competitive intensity, the operating leverage not being in place, and higher valuations.
Hi, Hemang. Good afternoon. Good to see you. When the other big trigger from the other set of numbers that we'll be looking at is the peer to eternal, Swiggy. It reports its numbers in the next couple of days. What is your sense on that number? Because it has a discount in comparison to eternal, but one part of the street argues that it is very rightfully so. What is your view?
Nigel, post eternal numbers in the management commentary, there are slightly higher expectations coming from Swiggy also, and the sense is that on the of course, the growth would not be that. It would be hardly about 1.82%. But on the quick commerce side, as we saw in case of Eternal, the growth would be about 23-24% quarter. I think the market is sensing that while the margins of operating profit may not be that good, the top line growth across delivery and more so in case of quick commerce to be very strong. And that would be very positive for a company like Swiggy because Swiggy at the end of the day is still quoting at a 22-24% discount for an internal. So definitely going into this numbers, we have a positive view and we think that even if the numbers are in line, commentary being slightly better, the stock actually give a very strong positive reaction.
Okay, now we'll keep an eye out on Swiggy as it reports numbers. Deepak, fertilizer numbers are at the bottom of the screen. Revenues are up 17% and profits are up 25%. So that is, a pretty good set of numbers that on a year-on-year basis. EBITDA is up about 10%, 11% or so. A widely tracked and widely held name as well, and it's spiking up in reaction to those numbers. So maybe more on this with Sonal in a bit as we kind of go along. Actually, it is a day for chemicals, Tata Chemicals we spoke about, which we will address in a bit from now. But the other one is Paradeep Phosphates, right? I mean, just a rocket. Again, numbers at play here. Vinny is going to detail that out for us. Vinny.
Hi, good afternoon. So yes, a strong set of numbers that came in from the company in Q1 FY26. The stock, intraday surge as much as 12% as well. Now, net profits of the company have come in at 255 crores, which is a growth of around 47 times on a year-on-year basis. Revenues are up 60%. We're seeing sharp improvement, to be precise, in terms of margins. More than 600 basis point expansion for the margins on a year-on-year basis, 12.4% versus 6.18%. It's a strong operational performance, strong growth in terms of revenue. And just a highlight that came in from Q4 FY25 for the guidance for FY26. The company had spoken about, sustaining those EBITDA per ton guidance. It was around 4,500 to 5,000 crores in FY26, as well as the total capex plan that they have for FY26 is around 500 crores. But strong performance, operational as well as on the top line, is keeping the stock robust today.
Okay. Vinny, thank you very much for that. We'll look at this one. Of course, I mean, it's a big one on a year-on-year basis, but company, of course, is small. Let's just look at the Tata Chemicals move as well. And, that's also surging as we speak. Sonal is going to join us, and there is a Morgan Stanley double upgrade which has come through. Now, while Sonal will detail that for us, the bigger sort of underlying thread across some of these categories which is happening, especially chemicals, refining, and steel, metals and mining, is that China seems to be cutting capacity quite a bit. I mean, at least that's the plan. That's what they've announced across categories. For example, in the case of chemicals, what China is saying is that any facility which is over 20 years old needs to be upgraded or shut down. And that is the reason for excitement across a range of not just, chemical names here in India, but in the region as well, and actually in Europe as well. The Chinese chemical supply, perhaps over the next year and a half or so, will take a bit of a backseat. That's the broader story here, but it's not limited to chemicals. And with regards to Tata Chemicals, there is a specific upgrade which we will touch base with Sonal a little later. But I don't know if you have any thoughts, if you've looked at this, Hemang. These are all commodity sectors in a way, where, of course, China is by far the largest player. Any names come to your mind, or how to look at this?
All host of companies are there in this space, and what comes to my mind is definitely Vinati Organics and Jubilant Ingravia. I think even the kind of portfolio that particularly Jubilant Ingravia has, and the fact that this quarterly numbers are due probably on 31st. So we are looking at almost about 30% kind of a YY growth top line with a substantial improvement in the margins. So I think combined with the situation in China, the fact that globally some of the specialty chemical prices are favorable, and you will have an advantage of the capex that the company has done in the last about 1 year or so. So some of these companies tend to benefit. Tata Chemical would be more of a play of one single commodity, and it's difficult to gauge how things are pan out. But definitely some of these specialty chemicals, we have a positive view. Vinati Organics and Jubilant Ingravia.
Got that. Happiest Minds is the other one, which came out with numbers earlier today, and it was a good set of numbers. The company's constant currency revenue growth was 2.3% quarter on quarter. Year on year, it was a revenue growth of 17.5%. Margins for the company expanded. The way the company calculates the EBITDA expanded by more than 200 basis points to 21.4%. And at the bottom line, there was a big jump of 68%. There was an exceptional loss in the prior quarter, but just look at that margin performance. 200 basis points margin improvement is what the company has reported. And this has been a tough quarter for the industry. And in such a quarter, they reported a 2.3% quarter-on-quarter revenue growth and 17.5% on a year-on-year basis. Among lots of mid-cap IT companies, are out. Largely, the consensus seemed to be favoring a Coforge or a Persistent, maybe a KPIT Tech. But other than these three, would you, is Happiest Minds on your radar? This is a company which was born digital. It was a digital native in that sense. Do you look at Happiest Minds or any other IT company that you like?
Prima, this quarter, particularly for mid-cap IT companies, even when companies are delivering in-line performances or slightly better, sheer valuations and the fact that people are not really confident about the growth visibility, over the next few quarters. We have seen a bit of underperformance come through from majority of the mid-cap IT companies, be it Persistent, Coforge. I think Happiest Mind, to my mind, be much smaller in size. Of course, they have some interesting verticals, and the numbers YY, definitely look better. But I would definitely stay away from some of these mid-cap IT companies because of the valuations. If I have to buy something, I would be rather comfortable buying into Infosys or HCL Tech, where there is a degree of valuation comfort. At least in Infy, we had positive surprise with a reasonably good clarity on the growth going ahead. So would rather prefer some of these large cap names.
Okay, that is on the IT side. Just very quickly taking a look at some of the other stock reactions, and today at least we have some pleasant ones. Like we were mentioning, Amber. Amber's numbers have been fairly all right. Just checking out, the tally as it stands. Revenue growth of almost, there we go. We have them on the screen. 44% revenue growth. Margins have come down a little bit, so that's a slight disappointment. But the EBITDA has grown about 35%. Profits looking up as well, over a 40% growth in profitability. That's Amber. And there is Varun Beverages. Varun, there's some sluggishness in terms of volumes and top line, but for Varun Beverages, the margin is expanded. So therefore, there's some positivity on these stocks. Look at that, 5% up on Varun. Hemang, very quickly, any advice, cues, any thoughts on Amber or Varun?
So Surabhi, Amber, just before the number, the top corrected a bit, and because of the early, onslaught of the this monsoon, some of these stocks, people were not sure what numbers they will throw up. I think Amber numbers look much better, at least in terms of the revenue. Of course, margins a little bit of a pressure, but I think it's more of a reaction to the fact that the numbers are not showing any signs of slowdown there. I think post management con call, we will have slightly more color growth. But overall, quite impressed by the Amber numbers.
Okay, they've done this acquisition as well, right? I mean, Israeli company that came out yesterday, and apparently it's a small one, some $40 million or so, but apparently it's a good one in terms of size of business, size of opportunity, etc. as well. So there's some news flow to track here. Results and, of course, that acquisition. We'll try and have the company on. NSE numbers at the bottom of the screen. That is the country's largest exchange, unlisted, but a frenzied amount of trading in the private markets on NSE. 5 lakh crore market cap, maybe a little lesser now. But what do we have? The basic numbers should come up. Profits are up 10% quarter on quarter. Revenues are up 7% quarter on quarter. EBITDA is up 12% quarter on quarter. These are not bad numbers at all. But remember, this is April to June. The curve on F&O, etc. started late last year. But the Jane Street thing only happened early July. That, of course, will not be part. I mean, volumes, etc. have quietened down after that. So that perhaps is not available. Will be by the end of the month if they decide to put out monthly data, and others will as well. But these are April to June numbers, and they look pretty okay, pretty good on a quarter-on-quarter basis. That is NSE for you at this point in time. We'll take another quick commercial break here. But just, some programming note. And this is, of course, our event which is happening in Bangalore. That's the latest edition of Future Female Forward, Season 3. So really a power-packed lineup of leaders who will be there, powering the future of work, capital, innovation. Catch it live today evening, 5:30 p.m. onwards, here on CNBC-TV18, CNBC-TV18.com and YouTube.
Welcome back. It's not a bad-looking screen at all. We've got a 100-point gain on the Nifty, and it's that time of the show where Hormaz joins in to go beyond the obvious stocks and get us some more buzzers. Hormaz finally seeing some green today.
Oh yes, and the list is reflective of that, and we start off with Punjab Chemical and Crop Protection as part of this list. Now this 1500 rupees stock has had a market cap of just over 1800 crores, 11% higher on this stock. It's a result reaction, but apart from the results, it announced new capex plans, and it expects that capex to add around 150 crore to its top line, and that is showing up on the stock price today, and it's gaining on very strong volumes as well in today's session. At 17 lakh shares already traded compared to a 20-day average of just 13,000 shares. Now, Fed Bank Financial Services, or FedFina as we used to address it, it listed in 2023 amidst much fanfare along with the Tata Technologies and the likes. Now, it's been gaining on strong volumes today. 42 lakh shares have been traded compared to a 20-day average of just 7.5 lakh. But despite this move, the stock is still trading below its IPO price, which is 140. Now, IIFL Capital is the other mover today, up 12 to 13%. It snapped a 4-day losing streak in today's session, and this 12% move is the best single-day gain that the stock has seen since June of 2024. And a common trend among all of these names is all of them have been trading on crazy volumes. And look at this, 28 lakh shares traded today of the stock, 20-day average of just 2 lakh. Mangalore Chemicals is the other one. It's been a recent mover in over the recent month or so. It's gained in 5 out of the last 7 trading sessions. So far this year, the stock is up 130%, which has made it the best calendar year performance so far since 2007. Now, starting 2020 till date, the stock has gone up from 30 rupees to 360 rupees. It's up almost 12x during this period. And lastly, stock that is bucking the trend in today's session is Camlin Fine Sciences, and it's down in a lower circuit today. It's the 5th straight day of losses for the stock. It's down 23% already this month, and despite this drop, the stock is still up 90% so far on a year-to-date basis, and this move comes after 2 negative years in 2023 and in 2024. Even today, falling to a lower circuit, the stock has had 5 lakh shares traded compared to a 20-day average of 2 lakhs. So finally, some green on the screen, and it's showing up in some of these movers as well.
Hormuz, thanks very much for that. So that's interesting moves that Hormuz highlights for us every day at this time. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you here. By the way, Welspun Corp numbers just flash at the bottom of the screen, and numbers look, that's a pipe maker, largely in the oil and gas segment, and numbers look very good. EBITDA is up 40%. I'm not sure if there are any expectations on this one, but at least on an actual comparable basis, the numbers look super strong. Rajesh, good to have you with us here. Lots of these mid caps performing quite well, even though overall, when you look at the headline picture, one is not enthused, but it's all about single stocks, which you focus on as well. What has come to your attention where you've been really positively surprised in terms of earnings from individual companies, Rajesh, so far?
Well, I think there are 2 things. One is I was just looking at yesterday market Friday close, and exactly 1 year back where market was. And if you look at it, the BSE 500 is up 0% on 1 year basis. Friday to last Friday, I was comparing 25th July. Similarly, BSE mid and small cap index is also 0%. So while of course 0% is not a great news, but at the same time, when you look at this 0%, considering the macro uncertainty, the global geopolitical uncertainty, the tariff wars, and still markets are not down. So market is resilient. That's number 1. And number 2, when you look at the earnings, I think the 2 bad sectors where we are expecting the highest pressure on earnings, particularly software sector and the large part of the banking sector, that is over. These are the 2 sectors where we were expecting the highest pressure on earnings. Software because, of course, the global economy is still under question mark, and banking because of the net interest margins expected to be under pressure. But I think as we move forward in this earnings season, more capital goods results, by and large, we expect to be a little bit better. We expect specialty chemical numbers to be a little bit better. Select consumer companies, you have seen yesterday, 3 companies have announced their results, and all 3 have reported reasonably good numbers. And I think you will see more of such trends going forward. In these are the select baskets, which are going to be the winners from this quarter perspective. So a lot of interesting, numbers are out. Many of these companies, EMS companies' numbers have been fantastically well. Few consumer durable proxy companies' numbers have been exceptionally good. So I think that's a trend, and we are rightly positioned, in those sectors.
Any new purchases at Alpha Accurate Advisors, Rajesh? And also wanted to quickly get your thoughts in on Coforge. I know it was a stock that you liked. Explain to us what exactly about that data center capex that the street didn't like, because the stock reacted very sharply on the downside despite seemingly very strong growth numbers. So first tell us, what have you bought recently, any new ideas or you've doubled down on, and then even on Coforge.
Company specific, we generally do not talk much, but in terms of the addition, particularly in last 3-4 months, rather than just last 1 month, we have been adding EMS names to our portfolio. Specialty chemical, we have added huge in last 12-15 months. From 0%, it is almost like 9-10% of the portfolio. And capital goods is one sector we continue to remain positive. Coming specific to the IT company name which you talked about, please put a disclaimer because we are holding Coforge for our clients' portfolio. I think, I do not agree with how market is reacted. The companies delivered fantastic numbers, number one. And coming to the data center related capex, good part of that capex is already funded by the client. And as a shareholder, what I'm always looking for is the companies which can invest and reinvest their capital in higher ROCE businesses. Rather than giving us dividend or keeping it as a treasury and earn other income of 6%, I think it is a great decision what Coforge is doing. They are taking very, very prudent approach in terms of capital allocation. And the capital what they have invested to get this deal is going to be good margin accretive on net basis and also ROCE accretive, more importantly, on the net basis. In fact, I'm sure we all basically keep thinking that why not the big IT companies in India? We do not have our own Indian Alibaba and many of these companies which have become globally number one, but we don't have Indian companies. But when Indian companies keep investing and if we punish them, then I think that's the wrong way to look at it. The ROCE of this business is very, very healthy. And even on incremental ROCE basis, we expect, I think the Coforge is taking very prudent decisions. So I'm not, too negative about, or I'm not concerned about this decision. I think it's a good decision in the interest of shareholders. And they are one of the highest growing company, if you look at last 4-5 years, despite various macro challenges what company has faced.
Rajesh, just to be clear, when you say that it's a good high ROCE business, you're talking about the move on data centers that Coforge has taken, right?
Yeah, because if you look at the total investment and if you look at how much client has already paid to them in terms of the upfront, the net investment what Coforge is making is not very high.
Right. Just to put those numbers, the company spoke about an $85 million capex, of which the client is going to give them $63 million. So the amount that Coforge will be investing is about $22 million, which is what, 150, 200 odd crore rupees.
And that's a strong argument that Rajesh is making, that now everyone's complaining, saying IT companies, large IT companies at least, they've not invested in new businesses, R&D, etc. And here's a company that's trying to do that. And the market is punishing it. So fair argument there. So that's Coforge. Rajesh, last I remember, you also own Trent. So just give us your thought process there, because again, market getting extremely negative, saying, what is this 20% growth? I mean, it's not even 25%, which Trent said in the investor call, and the stock was punished. On the other hand, look at an Eternal. Again, I'm talking about consumer. I'm not sure if you have an exposure to something like Eternal. But just tell us about both these, high growth businesses. What are you thinking about platform companies like, say, an Eternal and Swiggy? And are you still keeping the faith on Trent?
So, I think, from the Trent perspective, again, please put a disclosure because we have been holding Trent for quite some time. I think it is one of our top holding from last almost 4 years. Of course, we keep rebalancing our portfolio over a period of time. So, I think what is happening should be from market perspective, the reactions and response time is getting shorter. And everybody would like to be ahead of time. And at the same time, a small marginal disappointment that leads to 10, 15, 20%, correction. And of course, everybody then comes out with a report of downgrade. Now, think of it, if suppose 2 quarters down the line, because thanks to income tax cut given by the finance minister, the liquidity boost given by RBI, if there is a 2% positive surprise, even today, it is the fastest growing consumer company in this country, correct? It is and you compare any other FMCG company or any other retail company, And if you look at this company which we are talking about, it has reported the fastest growth. But yes, the valuations and the PEG basis, how one looks at it, and some downgrade definitely results into, some disappointments. So as a fund manager, we need to be active, we need to be agile, and we need to make sure that we have a prudent exposure. So we also keep adjusting our exposure depending upon our bullishness on the stock. And, that's the real life. But frankly speaking, in my heart, I still believe that a company is rightly positioned to deliver the best of the growth compared to the entire consumer universe.
All right. Hi, Rajesh. Good to see you. And any view on these pipe makers? Welspun Corp, actually, these numbers look quite strong because the EBITDA number has come in at around 525 crores, which is the highest quarterly run rate we have ever seen on Welspun Corp. And the margins, it appears that the beat has come because of the gross margin expansion, because there is some inventory gain, it appears, which has come at around 43% approximately. So Welspun Corp clearly is a stock that's walking the talk now. Over the last few quarters, they have moved from a 350 crore quarterly run rate to around 525 crores. And it definitely appears that they're executing some part of those US orders which were absent in the last many quarters. But now in the next 8 quarters or so, they'll get executed. Rajesh, any view on this particular name?
We do not own this company, but what happens is that as the US oil and gas sector's capex restarts, and that's what is happening from post-Trump coming in and the orders which are likely to get restart, this company, because they have a good exposure to US business, which is a high margin business compared to the Indian business where the order book is still not growing if you look at last 3, 4, 5 years. And because of this change in that fortunes, particularly in the US side, which is a high margin, and also the incrementally higher order book growth prospects, which is very likely, that's what Street is expecting. And that's what results into this better delivery from the company perspective. But this might, the limited views, because we do not own this company in our portfolio.
Okay, all right. Rajesh, stay with us, just coming back to you, but maybe we can quickly get in Mangalam, who's with us as well, with what's the latest as far as the F&O space is concerned from the F&O desk. Mangalam, tell us.
Well, there is a sharp recovery that we've seen for the markets, and the indices have come off low, sharply off the low. So we have the Nifty doing well, we have the Nifty Bank doing well, and we have the mid-cap index doing well as well. But the sharpest reversal that we saw are on a couple of parameters. One, if you look at the advanced decline ratio, at one point we had more stocks declining than the number of stocks which were advancing, and that has veered away once again. The lines have intersected, and if the green and red lines come up for you on the screen, you would see that they are fairly wide apart, almost 1,600 stocks in the green for a very small number which is in the red right now as compared to what we saw in the middle of today's trading session. The other thing that we're looking at is the India VIX. From a low of around 10, the India VIX rallied all the way up 21%, and now after today's up move, a reversal from the lows, the India VIX itself has come down. So currently sitting at the lower end of today's trading range with a cut of almost 4%. At one point, remember, the India VIX was higher by around 4.5% in today's session as well. All of this can be attributed to one big stock. Look at Reliance. The intraday chart of Reliance comes up for you up 2%. That's powering the cause of Nifty, and also supporting it is the recovery that we've seen on the Nifty Bank, though still slightly away from the 50-day moving average for the frontline banking index, that is. What's also aiding the up move that we're seeing in the market, remember, it is sensex monthly options expiry, but at the same time, those in the morning would have written the 25,600 call on the Nifty. They've been caught on the wrong side, so they are swiftly covering their positions, and they're turning put writers. So, the support for the market is coming higher. 24,800 puts fairly active, 24,700 puts equally active as well. So as you can see, short covering of the 25,600 call and writing on the 24,800 and 700 put, telling you that around 24,650, 24,700 is an important support to watch out for after the recovery that we've seen today. The put call ratio, which was oversold at close to 0.7 times, fell all the way to 0.64 times. That too has bounced back to around 0.77. And I'm watching out for a couple of stocks. In the last hour of trade, some long positions added in Asian Paints after the numbers. Street expects the worst to be behind. We have Syngene as well, which is fairly well bid on the future side. So fairly, high long additions is what we're seeing on Syngene. And finally, IEX. The threshold is 95% for a stock to go into F&O ban. The open interest is now at 94.77. So if it continues to see open interest addition, then chances are that IEX goes back into F&O ban. That's a stock I'm watching out for.
All right, Mangalam, thanks for that. That's F&O for you and a few names on that side, derivative side, to keep an eye on as well. Rajesh is with us. Rajesh, open question to you. I think we always do that. Anything new on your radar, Rajesh, apart from what we've discussed? Maybe you've added or you're watching closely?
Well, I think the CDMO space we continue to like, and with the new companies which are getting listed recently, we are following, we have been quite positive on CDMO as a space. Building material is another segment which is coming out of the bad times, particularly if you look at the tiles and the plywood side of it, so they're probably likely that the worst is over, and there are a lot of tailwinds which can start because whatever real estate you have seen the boom in last 3.5, 4 years, that is primarily the registrations. And now it's a time for handover of delivery, the actual position to the customers. And as that happens, it means next 24 to 36 months can be in your favor. And that can lead to revival in demand, in the building material space. And at the same time, certain raw materials within this building material, you are seeing the downward trajectory. So your volume growth is going to come back, number one. Therefore, you get operating leverage, number two. And number three, your raw material prices are coming down. And therefore, the competitive metrics, as well as the fight for market share, also comes in your favor. So net, your revenue growth and profit growth can be much stronger over next 12 to 24 months in the building material space in particular. That's the one segment which we like. And the second segment, which I've been talking about is the retail side of the apparel side of the business, the fashion side of the business. And there we believe that from September, October quarter, probably you will see the much better uptick in terms of the revenue growth, particularly for the branded players. And in fact, if you look at one of the companies which reported numbers yesterday, it has shown very strong 15% revenue growth, which has not happened in the last 8 quarters for the entire industry. So I think that is also probably bottoming out. The worst of I would say the fight of market share between e-commerce and the non-e-commerce players is also probably behind us. And therefore, even you might see some uptick over there. So net, the consumption basket on the discretionary side, within that, to these sub-segments, that's what probably we believe that they're likely to do much better compared to what we have seen in last 2 years.
CDMO, you're talking about, you're referring to Anthem, which is a recent CDMO listing?
Yeah, I mean, I think the entire CDMO space will do well. We have been holding CDMO companies, and the new companies as well. They are quite exciting business models with the strong revenue visibility.
Okay, Anthem's done well since listing from that space. So retail, apparel, building materials, and CDMO specific pockets there. Rajesh, thank you for your time. Good speaking with you here on CNBC TV18. Just a quick reminder for our viewers as we go into that break. You can unlock a world of exclusivity, expertise, and influence. Become a member of CNBC TV18 Access, our premium members-only experience on cnbctv18.com. The membership includes access to flagship events, interactions, along with curated studio tours, e-learning sessions, masterclasses, and curated lifestyle benefits as well.
I'm a star.
Welcome back. So we continue to track gains. The market's been holding steady, 134 points, and it's 24,800 on the index. Mitesh, final advice, both for the index as well as individual stocks.
On the index, I maintain that we might end higher and I think another at least 100 points. And in case it clear this 24,950 from even 25,200, 250 could be target. So it is still finding a ways, but doesn't look like a market which is possibly going to start some kind of a rally, but a bounce back is what I'm thinking at. And on the stock side, Reliance is a BTST with a stop at about 1409, 1408, and a target of 1435 can be looked at. And the other one which I like is Oil India. That's a BTST with a stop just below levels of 438 half for target of 446 or so.
Okay, all right. Got it. Thanks a lot for that, Mitesh. Well, let's hop across to Sonal. She's here to tell us about Tata Chemicals. The stock is buzzing in trade. Sonal?
Thank you for that. Well, remember, Tata Chemicals reported numbers on Friday, had the management commentary as well, which was quite muted. But there's an interesting note from Morgan Stanley, which talks about how they've seen a suppressed cycle, and the investor sentiment also about commodity chemicals is at a 20-year low right now. And maybe this is something that is forming bottom for these commodity chemicals. With the supply response underway, they think it's time to revisit equities, and per unit EBITDA economics in Asia are also at 2002 lows. Production outside China for listed companies, that is at 2016 lows. And that's why they think the cycle has ingredients for a positive uptake from here on. That's why they have double upgraded Tata Chemicals to an overweight. There is sign of global outbacks, which would support pricing from here on. And also Tata Chemicals is focusing on a lot of things, be it cost-cutting measures, be it volume turnaround, UK economy as a turnaround, or the business as a turnaround overall. And that's why they've increased the target price as well to 1,127 versus 839 earlier, because they think maybe bottom is near for Tata Chemicals and other names as well, and they think pricing will only improve from here on.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm focusing on Jaiswal Nico. And remember, a week or so ago, we were on CNBC-TV18 had highlighted this point, that the ARC had held a substantial stake in the company, and they've gradually been reducing that stake. As of June, they held close to around 25 crore shares in the company. I'm looking at the BSE data and the NSE data that they normally disclose on a day-to-day basis, and the cumulative is they have sold roughly around 19.5, around 19 crore shares, very, very roughly is what they have sold as per the large trades. The buyer yesterday was quite encouraging, because otherwise you've been seeing a lot of selling, but no notable buyer's name has turned up. Now, in yesterday's trading session, post we saw a large trade, and post that we understood that Shubham Capital Private, that's the company that has gone ahead and bought close to around 53 lakh shares in the company. It's a very, very small amount, but the significance of this is that Shubham Capital actually is the promoter entity of Shyam Metallics. It could very well be just a strategic investment, but the street is excited that the part of the promoter entity of Shyam Metallics has gone ahead and bought 53 lakh worth of shares. And just looking at today's volumes, it's massive. Out of those 5-6 crore shares that were pending, the street is sensing that maybe in fact bulk of this ARC clean-out trade has happened. That's the sense. Operationally as well, very quickly, the margins, just take a look at the improvement. From around 11%, it's improved to around 19%. So good looking screen out there. On a quarterly run rate, they were doing 150, 160 crores of EBITDA. That's moved to around 315 crores odd. How have they managed this? 100% of their iron ore comes in from captive sources. They've undertaken some modernization and capital repairs as well, which is definitely bearing fruit. And they've refurbished the blast furnace production, which has enhanced capacity and production as well out there. So operating leverage is playing out. So it's not just the operational performance that is improving. The interest cost as well has been coming down from around 150 crores that they were paying on a quarterly run rate. That's come down to around 120 crores because the debt was at more than 3,300 crores. That's come down to around 2,500 crores, or in all probability, there'll be further reduction in the coming quarters as well. So ARC overhang getting cleared out. Operationally, things are improving. The debt in the books is reducing as well. So what do we track from here on? Can they reduce debt further? Currently, they're borrowing at very elevated interest costs. So that's going to be important to track now that the ARC overhang will go out of the way. And how much can the FY26 EBITDA improve? Last year, they did south of around 1,000 crores. Can they do a much better number this year? That's going to be important to track. But we had alerted you last week that this ARC selling is gradually getting absorbed. And today, the stock is locked up in upper circuit. Post-market hours, we'll have to track the large trades.
Thank you very much for that. The two stocks driving the Nifty's strength today. One of them is L&T ahead of numbers, now up 2.5%. And the other one is Reliance Industries. Look at that move in the stock in the last 30 minutes. But let's quickly talk about L&T and the expectations from the June quarter numbers.
Well, that's right. Especially if you're talking about L&T, remember earlier today the company did receive a very large order, and this is something that is...
Go ahead.
Yeah, sorry. So, earlier today the company received a very large order of over 25,000 crores. So this is also one of the key triggers as far as the stock price movement itself was concerned. Now, when you're talking about what exactly to anticipate and expect from Q1, revenues are seen higher by almost 14% at over the 62,820 crore mark. The EBITDA seen higher by 13%, closer to the 6,360 crore mark. Margins on a year-on-year basis is seen slipping softly, almost 10 basis points lower, and all eyes will be on the core margin trajectory. Remember, the company has given a core margin guidance in the range of 8 to 8.5% for FY26. Profitability on the back of that seen higher by 21%. As far as FY26 guidance is concerned, the company envisages a top-line growth of 15%. Order inflow on a very high base of FY25 is seen at 10%. Any tweaks to that will be something that the street will watch out for very closely. Along with that, an important trigger will be whether the company is looking to divest its important power asset, that is Nabha Power. A few reports have indicated that the company is in talks with Torrent Power. Whether that proceeds and whether the company looks to go ahead and improve its ROE, or also known as Project Laksha, is something that the street will very keenly watch out for.
Okay, all right, got that. Vivek, thanks very much. We'll, of course, watch out for those L&T numbers. That's the big one to watch out for post-market hours. By the way, remember, you should definitely tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset. At 1 p.m., it's the Big C, and Global Lens comes up at 8:30 p.m.
Welcome back. As promised, we have Jay Bala, CMT at cashthechaos.com, who joins us on the show. Hi, Jay. How are you feeling about the markets? Give us two levels. One on the Nifty, what would the trade be? And on Reliance Industries, that has taken a bit of a break.
Hi, Nigel. I've been pointing out that once Reliance starts to bottom out, the market can start looking up. It's not entirely clear if today's low is the final bottom for Reliance. We'll just allow some more price action to reveal what's happening. When it comes to the Nifty, we're still focused on the 24,400 support. But this is very close to the price action. On my last check, the move from today's low was only 3 steps. So we defined trends as a 5-step move. So maybe one more high will confirm the Nifty has bottomed out. But until that point, we keep 24,400 as a mark is a point where this market is headed to. The resistance comes at about 25,660. And the unlikely event that the markets go below 24,400, the levels are at 23,950 for the Nifty.
Jay, afternoon. Reliance Industries, that's making a bit of a move. And even some of these IT stocks like TCS, which has been in the news.
Yeah. See, TCS needs one more sequence of lower low to come through for it to find a bottom, at least one more lower low to come through. But whereas the Nifty IT index is doing a lot better compared to TCS, and I've been pointing out from the middle of last year that TCS, when it crossed fresh 52-week highs, the price action was suspect. So, it's not surprising that it's here. The index support for the Nifty IT index is at 34,280. As long as that holds, the IT index has a potential to reverse from here. We have been counting the bounce from April low as a counter trend bounce, but watch 34,280 as a very important support for the Nifty IT index.
Jay, you have 2 long trades?
Yeah, the pharma sector is perking up, and I pointed out in June that 24,100 was an important level. 22,100 was a very important level, and it's starting to pick up momentum here. And there's a potential that pharma index is headed to something like 26,000 by the end of the year, or slightly a little later, subject to the whims of Donald Trump. The call on the pharma sector is Cipla. Cipla with the objective of 1750, with a stop loss of 1450. And I think the crude oil is starting to trend lower. And I have a conditional call on the OMC space, HPCL in particular. If it crosses 431, keep a stop loss of 401 and keep an objective of about 470 to 480.
Okay, that is HPCL, Cipla and HPCL. You can, the stock should come up on your screen. What Jay was referring to. You have a Jay view on defense as well. You're saying that early signs that these names HAL, BHAL, etc. may resume their up move.
That's right. It's not yet resumed, but that's showing early signs. But I pointed out to a double top for defense stocks a couple of months ago or a few weeks ago, and that's it's if this is a bottom, it might be just a short-term top, not a medium-term top. So watch for further price action to confirm. It's an early sign that it could reverse, but it's not yet reversed. So it's just probably a signal for people who've been short to start covering positions, but it's not at reverse yet. But this is showing early signs of a reversal.
Okay, early signs of a reversal. I'm going to start wrapping up things here. Jay, stay with us. So we touched upon IT, pharma, defense, of course, view on the broader indices, and a couple of trades as well. But more a little later after market close coming to you, Jay. The market close itself is pretty good. A pretty solid kind of close coming through. 24,825 is where we are at. Another 150 points. Basically, as I was saying, we need to sort of get above 25,000 for the market to start to believe that maybe the decline itself is complete now and we need to look up. But today, really, the broader market is the story. About 20-25 names, mid and small caps, which rallied hard on the back of very, very solid volumes. That really is what shone through in terms of trade. And one spot I'd like to especially talk about is chemicals, right? Chemicals and all sorts of chemical names. Tata Chemical was, of course, something which Sonal highlighted. Paradeep we highlighted. But look at others. Punjab Chemical, Sharda Crop, Deepak Fertilizers, Zuari, Granules, Dhanuka. So lots of action, especially in this part of the market, but not limited to it. You had many other sort of names which did very well. Varun Beverages was up solid. Arvind Fashions, Netweb, Affle India, Wellspun Corp. So many numbers coming through. So pretty busy last 1 hour coming through. But we sort of touched upon many of these on the back of earnings, especially. Some on the downside. IEX continues to sulk and not really back at the lows that we hit that we saw earlier, but close to it now. Home First and Paras Defense and Aeroflex are some of the other names on the downside. But out and out, win for the broader market, especially in the mid and small cap space, is what you had. Well, I think it's a wrap on this edition of Closing Bell from the entire team here. Thank you very much for staying with us. But Markets Forward will pick up on all the action in just a bit.